Good morning, traders. It is Wednesday morning. We're about 2 hours into trading. October 2nd, the market is down right now. We've got the S&P futures down about 50 points. Lots of weakness. I want to start today's video off with a quick shot of the chat room. In the chat room, I start off with extensive market comments, so you'll see all my market comments early in the day. You can check the timestamps here, and in my comments, I also posted a chart, and you can see right here, 15 minutes into the open with the two long red bars closing near the low. This is likely not to be a bullish trend day, meaning no reversal coming with a grind higher. May seem obvious, but it's not. The long red candles to the start of the day suggest that any bounce will be a good short. Okay? Favor the short side. Yes, that was a good call this morning. Everything starts with the market. And as you continue to scroll down, you'll see at 8:46, I point out Roku. That was the only stock. I did buy it early in the day. I made money on it. The stock's actually positive for the day. I did short the futures. I made money there as well. I'm going to log out and go to my home page. Everything you see today is an option stalker. If you like this video, please subscribe to it, because every day I'm going to be posting this video as soon as I can in the morning. It will have actionable trades, and I'm going to do it the rest of the year. So this is free information. I want to show you how to use Option Stalker to find these opportunities. I think that you'll be really impressed with it, and I'd love to have you aboard. Go to www.oneoption.com. You'll be able to sign up for Option Stalker there. You can take the 1 day or the 1 week trial, excuse me. And if you like the video and you think the content is good, please give it a thumbs up. But again, if you're an active trader, please subscribe to this YouTube channel, because as soon as I post the video in the morning, you'll know that it's been posted. You'll be able to watch it and get your trade ideas for the day. So I've recorded a little bit later than normal. We're about 2 hours into trading today because I want to focus on the market. As I mentioned yesterday, market first, market first, market first. A lot of you might be thinking, oh yeah, yesterday Pete came in and he said that, we should be doing bullish put spreads. Everything that I did yesterday, I placed a caveat on. When the market finds support, we have to focus on the market. I'm going to drop the 200-day and the 100-day moving average. And yes, we were expecting to see some support here at the prior horizontal support level yesterday with a bounce off of it. We didn't get it. And we'll go into a 5-minute chart, and we're going to go back to the trading day yesterday, and we're going to take a look at the price action throughout the course of the day, and you'll see that it was drifting lower the entire day. So you can see this is about when I did the recording, was in here, and I had mentioned to you that we needed to see two big green candles stacked one on top of each other, kind of like these red candles are stacked on top of each other. That is a very bearish sign. Guess what? Boom, boom. Bearish sign for the day. Here we go. Making a new low for the day right now. I'm going to take off my 1OP indicator, and we're going to take a look at that longer term chart once again, because I want to highlight a few things. We're below the 100-day moving average. On the low of the day, steady selling. You can also see that if I draw a trend line from this point and I cross through those lines right there, we're just below it. So what does this mean? This means that we do not want to be favoring the long side right now. And I don't want to be one of these guys who comes in and tells you, yeah, sell bullish put spreads, the market falls, and then we don't revisit that, and we don't fess up to the fact that we might have lost money on these trades. But first of all, you should have been pretty careful on those bullish put spreads, because the market never did what I told you to look for yesterday. We never got those two green bars stacked one on top of the other. We never had a double bottom high or low yesterday. So you should have been patiently waiting into the close. But let's go take a look at those stocks. That's how we should spend our day right now. I preach relative strength, relative strength, relative strength. So let's say that you ignored what I said about the market and you just focused on the stocks. You got tunnel vision. That's what a lot of traders do. They zero in on a stock and then they forget about the market, and then they start scratching their heads going, gosh, what happened? the stock looked so good yesterday. Yeah, it's going to follow the market. 75% of all stocks follow the market. That's why I spend the first 3 hours of my day doing market research, posting my market comments, and doing market comments in all of my videos and market analysis. That's how I start everything. You have to start with the market. So we've got weakness today. This market could continue to go lower. What are we going to look for? Are we going to look for bearish trades? No, I'm not going to do that. First, let's go through and let's take a look at how our stocks fared. And I'm going to go through all of them that I highlighted yesterday. GPRO. I was talking about selling this $5.50 put. You can see right now the stock is below the 100-day moving average. I suggested selling those puts naked. Right now, yes, you could reel those back in. You would have gotten some premium for them, probably about, they were at the money, I'm guessing probably about 15 cents or so. So you'd be down probably about 35 cents on the trade right now. If you like the stock, you can still take assignment, and you see this gap higher. I do still kind of like the stock, and I'd be willing to ride it out during the course of the day to see what happens with the overall market and what happens with the stock. We're going to zoom in. Take a look at that M5 chart. You can see drifting lower. We will overlay the SPY to see if there's any relative strength. It's kind of following the market right now, so it's continuing to drift lower with the market. So this is definitely a loser. If you did the trade yesterday, GoPro is not doing what we expected, and we know that because it's below the 100-day moving average. That was our technical support level that we were leaning on. And you can see how yesterday opens higher, closes on its low of the day, does not get through the 200-day moving average, which is one thing that we wanted to see. You have an inverted hammer that's a bearish formation, and it closes right on the 100-day moving average. So there was really no reason to do this trade. But again, we're trying to see how well these stocks held up and what kind of relative strength they still have. IBM. The deal on IBM, we were looking right here. The strike price was the 141 put. So you can see that spread would still be out of the money, and you would still have a decision to make right now. Would you be able to hang on to the position right now? You would be taking heat on it for sure because the stock is down, but it's still well above the 100-day moving average, and you'd have time to see if the S&P 500 is able to bounce later in the day. My suspicion is we're going to see a pretty nasty decline today. Any bounce in the market will probably come in the last half hour, and it probably won't be that meaningful. This is a big bearish downtrend day. That's what's happening. So let's take a look. So IBM moving against, but nothing horrible. Yesterday I did point out this Morgan Stanley bearish call spread using these strikes to leverage off of. That trade would be in great shape today. You'd definitely be making money on that one. UAL, I love this multiple support level right here that you would be selling your puts right below these support levels. You could have used the 100-day, or more conservative would have been the 200-day. When that stock gapped down below the 100-day moving average this morning and you had weak market conditions, you gotta buy that one in. If it kind of hovered around in here and it were waffling back and forth and it had some relative strength versus the market, then you could kind of hang out on it and see if the market's going to close higher or not for the day. But given that it opened and blew right through that 200-day moving average, through all the moving averages that we were leaning on, you got to buy that one back in, take your loss, move on. We're going to have plenty of trades that do work out. Right now, just take your lumps. Don't adjust. Don't roll forward. Take your lumps and move on. That's how we do it. JBL, still nice relative strength. You can see this bearish engulfing pattern yesterday. Stock closed on its low of the day. Well, so did the market, so not unexpected. Today, though, the stock is holding its own pretty well, and we were talking about being able to sell the $34 put, the strike halfway up this long green bar. That's what we're going to be counting on for support. Would I do the trade right now? No. No. Not unless the market starts to find support, and if the stock holds that $34 level, then I would consider it. And right now it looks pretty good relative to the market. So there's another one, Nike. Nike, a post-earnings play. We were looking at this close right here holding, and that would be the short strike that we would use. Well, we're still out of the money on it. You can see how the stock is still holding that gap right there. This is the level that we absolutely need the stock to maintain right there. And you can see that was the low from the post-earnings day. That is your support level. And we were talking about selling the $90 put, I'm pretty sure. Actually, $90.50 we're using that strike price if it's available. But 90 would also work if there isn't a $90.50 strike. So, bearish engulfing pattern yesterday. Okay? Bearish pattern. You don't want to be selling that put spread until the market starts to strengthen. It closed on its low of the day along with everything else. THO. But again, these put spreads are still out of the money. THO, we like that. Bounces off the 200-day moving average. We would have hoped that it would have been able to poke through. But you can see it's still above the 100-day moving average. And that was the goal in the first place, was to sell below this 100-day moving average. That should be horizontal support. It should be support on that 100-day moving average as well. So this would still be a decent play, but another inverted bearish formation here, a bearish hammer. Let's keep going. We've only got a couple more, and then we're going to take a look for some trades here and see what we can find. Win needs to hold this uptrend. That would have been our stop, and you would still be in okay shape on that. And the stock is actually holding up pretty well relative to the market. So this could still be a decent bullish put spread if the market finds support today. We're going to go back through and look at those support levels because that is a critical assumption. We've seen very heavy selling. So AMAT needs to hold this horizontal support level. That was the premise under which we would do the trade. And I don't even think I gave a strike for this. It wasn't a bullish put spread so much that we were looking at. We were looking more at a bullish day trade. But you certainly could use that $49 level as a technical support level. You've seen support there, there, there. So this level seems to be holding, and it's got decent relative strength today. We can put up that 1 OSI indicator, and the orange line is right on that zero line. So decent relative support. And Apple was a stock that I liked yesterday from a day trading standpoint. Yes, you could definitely look at Apple for a bullish put spread. There's your support. That was resistance. 1, 2, 3, 4, 5 times it bounces off of this level. So yes, the market finds support. I still like selling this bullish put spread. So what's the conclusion here? The conclusion is that the video yesterday said we have to have market support. We had a weak ISM manufacturing number yesterday. We had heavy selling right out of the open. We had those two long red bars stacked one below the other. Those are all bearish. We needed to wait for that capitulation low. We needed that reversal. We needed those two green bars, or we needed to have a double bottom higher low. We didn't have any of that. The market continued to drift lower. We didn't hit support. You should not have done your bullish put spreads. But I still wanted to go through the exercise of showing you how well these stocks would hold up. And that's the beauty of what we do. We find that relative strength. Even if the market throws us a curveball, if we're in the right stocks, we have time to adjust the position and exit. Sometimes we have to take a loss. A lot of the times we're able to get out at a break even or even make money. If you're trading futures, you don't have that latitude. You're on the wrong side, you're going to lose money. So let's go in and take a look at the scanner and see what we can find. I am still leaning on the bullish side. We got to go back and take a look at the market and see what might possibly happen here. So we have a bearish downtrend here. We have a possible double top. Usually on these double tops, you're going to see a lower high. That would be the true definition of a double top, but we're pretty close to that. We did poke through to a new all-time high a couple of times we tried. So let's assume that this is a double top and we're starting to see some selling and we break down below the 100-day moving average. So from a bullish trade standpoint, the only way that we can even start to get bullish is if we see a capitulation low it's not going to happen today. We're over 2 hours into trading today, and the way that those formations happen is you will see a big drop down, and then through the course of the day, you will rally all the way up to the high of the day, and it'll form a long bullish hammer. And then you'll get follow through the next day through that 100-day moving average. If we see a reversal like that today, absolutely, you want to fire on those stocks that I just showed you. I don't see it happening. I see us continuing to drift lower. And right now, we've got this long-term uptrend that comes in right around the 288 level, which is right around where we are right now. So that is providing some temporary support right now. There's a chance that we could go down and test the 200-day moving average as well. You see support, support, support. Well, that happened a while back, and now the 200-day moving average has been able to crawl up to where this is horizontal support and it's the 200-day moving average. So let's drop a line right there. That is a big time support level. That should hold, and we should see this is a type of formation that we're talking about. So the market gaps down, you get a reversal off of the low with the SPY closing well off the low, and then the next day you get one of these long green bars and it's through the 100-day moving average. This is a capitulation low formation. When you get this, then you are definitely in business, and this would be a great opportunity to get long. So we still got some work to do. This is just in the beginning stages. So right now we're probably in this stage right here where we've got a couple of long red bars that are coming through the 100-day moving average. Well, if you start getting in here, yeah, you can weather the storm with the right bullish put spreads in the right stocks, but there's still some nastiness ahead that could shake you out of those positions. So we would rather wait for this to come and go, get that long green bar, get back above the 100-day moving average. Then we know the coast is clear. Then we know we aren't going to get shaken out of these positions. And the option implied volatility should still be relatively high. That favors selling premium, selling out of the money bullish put spreads. Why do I feel that we're going to move higher in the market? What tells me that we could move higher? We've got trade negotiations happening next week face-to-face with China. That's bullish. There will not be a trade deal before the 2020 election. Won't happen. Both sides know it. And right now, both sides are just trying to keep investors appeased. They're trying to keep the markets calm. So even though a trade deal won't happen, this is a warm fuzzy for the market. We might have a possible trade deal with Japan. That's good news. Brexit does not look like it's going to happen until January 31st. The deadline was extended to that point. Boris Johnson still feels like he's going to be able to force a hard exit. I don't see that happening. We've got earnings season coming up. We've had very few pre-earnings announcement warnings. That's a good sign. The bid tends to be pretty strong heading into earnings. The Fed has said we're ready to ease if economic conditions warrant it. Well, guess what? We had a weak ADP number today, 135,000. Not super, super weak. We had that weak ISM manufacturing number. Okay, well, that might be enough of a reason, especially if we combine that with a weak unemployment report Friday. But ISM services is much more important. That accounts for 80% of our economy. That's going to be coming out tomorrow. Last month, we had a weak ISM manufacturing number. Market sold off temporarily, and it was followed up the next day with a gangbuster ISM services number. Well, that accounts for 80% of the activity. That's more important. We could see another good ISM services number tomorrow. I think the market has a chance to bounce. But again, we have to pay attention to these major moving averages. So until we see one of those drops and until we see that reversal, that bullish hammer that we're looking for with follow through that 100-day moving average, we have to be very, very careful. But I do want to start looking at some potential bullish candidates, and then we're going to take a look at a couple of bearish trades to see what might be lining up. Let's go into the 5-minute chart and see what the market's doing. You can see very, very steady downtrend. I'm going to take this one OSI indicator off. I'm going to overlay a trend line here. I'm going to use down trend line 60. You can see that one's still pointing way up here, but a down trend line 20 will put us right in here. If you are day trading, you do not want to do anything until that trend line is violated to the upside. In fact, every time that the market rallies to it, you want to be short, not long. You want to assume that this trend is going to continue. I believe it's going to continue until the last half hour of trading, and then maybe we get a little bounce. So use that trend line as your guide. Also be looking for a double bottom capitulation low. We never got one yesterday. So you want to see the market go down, bounce, down. Okay, now we have two tests and then a rebound and through that prior resistance, or the inverse of this. These are two long red bars, one below the other, closes near the low, closes near the low. You want to see the opposite. Green bar, close on the high, green bar, close on the high, stacked one right after the other. That's a sign that you want to start buying. That's the type of formation we must have. So let's go in and see if anything is moving well. Well, I know one stock is, so you put this on your radar. If we bounce today, you're going to want to buy Roku. Look at that relative strength. The stock actually is up today. And we have a search that we can use to find this. So I'm going to go into heavy buying search. Most of these are contra ETFs. They will follow the market. You can see TLT, that's the 20-year bond. That's starting to rally. Flight to safety. TLT looks like it'd be a pretty good buy in here, getting through horizontal resistance. It wants to move higher. That's not necessarily a good sign for the market. LEN, earnings before the open today, really trying to move higher. There's an earnings search that we can use. You can see how it was able to stay above that prior day high. I like LEN on the long side. I would definitely day trade LEN from the long side if the market bounces. NIO, this looks pretty good. If you like cheap stocks, this is a $1.52 stock with heavy volume. Let's take a look at that daily chart. Bullish engulfing pattern, okay? This could be a capitulation low for this stock. Look at that volume. NIO. I don't trade a lot of cheap stocks, but this one certainly is compelling. From a day trading standpoint, want to get through that horizontal resistance right there. I'm going to put it right at that level right there. Give it a little room at that 153 level. Yes, I like it. Super easy search. Heavy buying. That means it's got unusually heavy volume. The stock is above the prior day's high. Well, let's talk about that alone. If a stock is above the prior day's high on a day like this with the S&P futures down 50 points, it's strong and it wants to go higher. And liquid options. So it has all of those things working for it combined into this one search. I love this search. It's the first thing I go to every day. Let's go to relative strength. These are stocks with relative strength. First, I want to find stocks that are up for the day. So TTD, barely up. Take a look at the longer term chart. Nothing too interesting there. Here we've got a stock that's bouncing off that 100-day moving average. This looks pretty good. And this could actually be an excellent bullish put spread. So I'm going to write it down, COUP. And you would key off of that 100-day moving average. Well, why do I like it here? Another one of these capitulation lows. Stock sells off, heavy volume, bullish hammer, green bar through the 100-day moving average, strong on a day when the market looks like garbage. Yes, I like selling this one right below that 100-day moving average, so you would use the 130 strike. There we go. Not too hard. Lennard, yes, you could sell a bullish put spread right here using that prior resistance level right here. Now it's support. Probably use the 55.50 strike. That would work. DE, nope. It's broken down below that trend line there. So Don't see anything that I would like right there. Again, these are stocks with relative strength. They are strong today relative to the market. So I'm just looking to see if there's anything that screams out at me. This stock Lulu needs to break this downtrend line. Then we'd be interested in it. And you can just come in, you can draw your trend line automatically. We'll use a downtrend line 20. Boom, there you go, it automatically draws. Same thing here, need to get through that downtrend line. If we do, I like it. I like this one a lot. So we'll go in and draw that trend line. And see that one starting back here a little steeper. Stock is through the trend line. It's through this lower trend line also. Using that 200-day moving average right now, it's sticking to it with good relative strength. That's where you'd want to sell your put spread, is below that 200-day moving average, right on support. Well, why do I like it? Long red bar, closing on its low. Next day, stock tests for support, and it finds it because it shoots back up to the high of the day. Bullish hammer. Next day, boom. Lots of relative strength because the market was down and the stock did this, and it pushed through the 200-day moving average. What's it doing today? Above the 200-day moving average. So OKTA is okay in my book. I like it. And that's what we do. We start looking. The relative strength is easy for us to spot on a day like this. Spot. Interesting. Able to hold this support level. Still has a little bit of work to do, but looks like it might be finding support there. This stock is finding support, team. You can see above the 200-day moving average. Still nothing to get excited about, but definitely interesting. This could be bouncing off of that level, but nothing yet. We've got better. We've already identified better. Match. There's a bullish hammer right here. The stock is holding its own in weak market conditions. Need to have that relative strength pop up just a little bit. Going to go into pop bull. One stock only there today. Woo. TSG. So those would be some bullish stocks that I'd be looking at. I gave you let's see, I gave you 5 names. Roku, love Roku. Take one more look at it. And you can see the stock is compressing here. You can see how it's starting to gain momentum here, probably on one of these other time frames, like an H2 time frame. We're already, that's a 2-hour time frame. We're already strong relative to the market. On a 4-hour basis, we are as well. So compressing down here. Look at that, NIO. I told you I like this one. That's another one. So Roku, R-O-K-U, L-E-N-N-I-O, O-K-T-A. Take another look at that. I'll enter all these symbols so that you can see on the video. O-K-T-A, we like that one. L-E-N, we like that one. Leonard, that's an after earnings. It's a post earnings play. N-I-O, like that one. Really like that one. And C-O-U-P. So those are our bullish picks. I'm going to go into a couple more here too. Buy into earnings. Okay, this is one that I showed you yesterday, Costco, and I don't know why I didn't highlight it today, but Costco is going into earnings, and you can see the relative strength here. We were using this horizontal support level. I like this one. The stock tends to rally into earnings. That's why it's buy into earnings. 2 weeks ahead of earnings, it has a tendency to rally over 75% of the time over the last 12 quarters. That's a statistic we can lean on. And you can go through this search and you can look for lots of other similar candidates. So I'm not going to go through all that, but I am going to look at strong after earnings. Here we're looking to see how well the stock is held up. JBL we already looked at. KBH we looked at. THO we looked at earlier. Needs to hold that 100-day. So that if the market holds up, I like this one below the 100-day, but I want to see the stock gain some relative strength. It's starting to drift back and give back some of those earnings gains. 2 tails above the body here off the 200-day moving average. That's not a bullish formation either. So Got to be a little careful. Got to start seeing some decent activity there. Yesterday, MKC, you could see how the stock rallied up. We get halfway up that long green candle. I'm not going to sell a bullish put spread or buy a stock that does this. So just the pattern of the stock is not good. So this search looks for stocks that have announced earnings in the last 2 weeks, had a gap higher through horizontal resistance, which you can see right here, and that have been able to hold that opening gap higher. So below this 200-day moving average, or excuse me, 100-day moving average, this might be a decent bullish put spread, but I don't think the stock has good option liquidity. Let's take a look at the market, see what the market is doing right now. Starting to get a little bounce. You can see the tail underneath the body right there. Is this the one? Is this a good bounce? No. What we would need to see is we would need to see the stock or the SPY rally, come back, almost test this level but have a higher low, and then take off through that resistance level. So I don't see it. The market, I believe, is going to be very soft today. So let's see if we can find a bullish, or excuse me, a bearish trade. So how do you approach that? Everything is getting buried today. And most stocks make their move early, by the way. So if you don't catch them early, to trade them later in the day is going to be pretty tough. So the only way that we can do that is to catch a stock that is bouncing. So I'm going to go into custom search, and we're going to try and find something that's bouncing. So we're going to click heavy volume. We're going to click good option liquidity, and we'll go with an option liquidity of 4. Obviously, we want the stock below the prior day low. We'd like to have the stock on a sell signal, but I'm going to go with a sell signal new, meaning in the last 2 days it's had a new sell signal. Only 2 stocks, but that's okay, because these might be 2 really good candidates. And so now what we want to do is we want to try and short a bounce. And you can see the uptrend line right here. I can just click TL uptrend line 20. That's what needs to be breached. So if the stock continues to move higher and that trend line keeps extending, when it's breached, that would be a good opportunity for us. Walmart was the other stock in that search. Let's see what it's doing. We got a nice bounce here. We've got another trend line that we can draw. Do the TL20 uptrend line. There you can see a poke below it would be bearish. But I'd rather see the stock go up, 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 start to flatline, show me some relative weakness, and then falter. You can see the stock is still strong. Bullish explosion alert for 6. Ooh, this is an incredible. Ooh, that looks pretty good. Let's go on the daily. This is a search. Okay, I wouldn't trade it, but it could be still a good trade. You can see the downtrend line. There are stocks when you want to be in instantly on these bullish explosion alerts, and I'll tell you about it. I searched for heavy volume over a 5-minute period for every stock all the time. And if it makes a huge volume spike and it gets through horizontal resistance, it comes up on this bullish explosion pop-up. And I'll show you a couple that we've caught. You don't get a lot of these really big ones very often, but when you get them, they are incredible. We caught Qualcomm back in here, and it just screamed for 2 days. And we get these instantly. MYGN was one that we just recently got. We didn't get long up here. We got long in here. I like to look for horizontal breakouts through resistance and above major moving averages. If I see that and I get one of these explosion alerts, I don't ask any questions. I don't look for any news alerts. I just get long. And they work. And they work really well. Before they can even type the news up, before you can even see this stock on the news wire, this search is going to pick it up. All you need is 4 or 5 of these a year, and it more than pays for anything you'd ever pay for Option Stalker. So that's the caveat. That's how we use it. It came up, so I thought I would show it to you. So I wouldn't trade 6, but we can certainly take a look and see if there's any kind of follow through on it. Probably has some news, and it's through the prior day's resistance level. We'll take a look at a 30-minute. So we can put an alert on it, and let's go a little bit high right here. Let's go right in here and see if it can get through that resistance. We'll go to a longer term, and it's been trending down. So This is a pretty weak stock. It could just be a short covering rally as well. You can see the heavy selling pressure that's built up. So I'm not excited about this one. I don't think it's going to materialize into much. So we're going to go back to this search, and we're going to be looking for stocks that have bounced and that are giving us a chance to enter. So what I'm going to be doing now is I'm going to be looking for ADX, very weak. That's a way that we can measure a stock's weakness. You can see we have a lot on the list. Now I'm going to actually do something a little bit different. I'm going to be looking for a buy signal on a 5-minute basis. So we're going to go in, a little counterintuitive. We know that this stock has bounced, and I'd mentioned to you earlier, that's what we need, is we need a bounce. And so right now, Abbott not bouncing enough, but if I put the buy signal up, you would see the buy signal there. So not going to be a very good candidate for us. AXP, I need to see a little bit more lift than this. I want to see a stock, this would not be bad. Now you draw your uptrend line here, and when the stock starts to flatten out and you get a sell signal and this drops below the 0 line, so you get relative weakness and a sell signal, that would be a good opportunity. CVX, okay, that's Chevron. A lot of these stocks are down on their low, but this is the process that I would go through. I haven't gone through it so far today, so I don't have anything lined up for you as far as a good short, and I'd probably spend about the next 5 minutes trying to find one. We already looked at Morgan Stanley, Microsoft. That's got a little bit of a bounce to it. Let's take a look at the chart. Boy, I'd love to find one for you. Microsoft below the 100-day moving average, very tight compression, not a lot of momentum, so not a favorite. In fact, that stock, if it pokes back, this is okay. Here we go. This is good. I like it. Starbucks. Nice, trending lower, compression, horizontal breakdown, selling, relative weakness through that 100-day moving average, near its low of the day. Yes, I think Starbucks is one that you can short, and here's how I would short it. Just draw that trend line, and you want to see it poke below that trend line, and you want relative weakness, and then you can short it. But I think the market move is starting to pretty much wind down here. We could still see some weakness, but we've got this 288 support level. So we could just flatline here for most of the day, get a little bounce here, a little sell-off. This is likely to hold, so I would not be aggressively shorting. That window is past. You had to do that in the first hour of trading on a day like this. And now I think it's time to shift gears a little bit and start looking for relative strength. It's very, very easy to spot because stocks that are moving higher in a weak market environment like this want to go. And this is how you find them. You use this search engine. You look for stocks that are still above the 100-day moving average. They're on a buy signal. They've got heavy volume. They have strength relative to the market. Those are the types of stocks that you want to find. And let's see if we can find a couple swing trades. I know I'm going a little bit longer today, but we've got a big market move. Big market moves translate into opportunity. So this is a good time for us to see what looks good. So I want to spend a little bit more time. So these are all decent stocks. And you can see Tesla has been excellent. I really like Tesla. I traded it yesterday and did real well with it. And the stock is down. You can see it's still holding support in there. Let's take a look at the longer term chart. It's compressing here, drops down below 100-day moving average, bullish hammer, follow through. I think this stock continues to go higher. You can draw a down trend line from here. You can draw one from here. This stock looks like it wants to push higher. I think it's a good candidate for selling a bullish put spread using that 100-day moving average to key off of. Just going to click through a couple of others and see what we can find. Shop. I like Shop. I like Shop. It just needs to get above this 100-day moving average, so I'm going to put a GTC alert. Gets above that 100-day moving average, I would definitely be selling that bullish put spread. I do like Shop. Let's see what it's doing today. Nice bounce off of the low right here. Yep, I like this one. So if the market bounces today, I'm going to add shop to the list. I really like it. And then tomorrow I'll try and recap some of these. We're just looking to see if there's anything that looks good on the daily chart, because these are all strong relative to the market. And a lot of them we've already looked at. Lennard, Nike, NXPI yesterday, OKTA, I love that one. So that's it for today's video. Little lengthy, but I hope I gave you a lot of information. Option Stalker finds these stocks. We just need to pay attention to what the heck is going on with the market. Right now we've got market weakness. It's not time for us to jump in. We need to wait for that capitulation low. We need to wait for those two long green bars. We need to wait for follow through the next day that gets us through the 100-day moving average. And when that happens, it could happen very, very quickly. We need to have our candidates lined up. And the way that we can also do that is we use these GTC alert lines that we drop, so that when that happens, boom, they start happening and popping up one after the other. We get alert after alert after alert. We don't have to mine for stocks. We don't have to look for them. They're delivered to us via these alerts, and we already know that we like them because we set the alert ahead of time. Thank you, traders. We'll see you tomorrow. Please subscribe to this YouTube channel. I'm going to be posting these videos every single morning for the rest of the year. I'll try and get them out as early as possible. Today we had a big market move, so I wanted to wait so that I could give you all this additional information. If you like the video, please give it a 2 thumbs up. Thank you.